If you've recently tried to set up an SMSF and suddenly your accountant is asking a lot more personal questions than usual, where your money came from, what industry you work in, who else is involved, there's a reason for that. On the 1st of July 2026, Australia's anti-money laundering laws expanded to cover accountants and lawyers for the first time. The same rules banks have operated under for years now apply to your advisor. They're legally required to run background checks on you before they can act. It's called Tranche 2, and most Australians have no idea it exists. I'm Troy, founder of Blue Chip SMSF. Today, we're breaking down exactly what this means for SMSF trustees, why you might be flagged as high risk without doing anything wrong, and why your advisor literally cannot tell you if your setup has been delayed because of a compliance check.
Welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services. And over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it.
First, let's clear up the biggest misconception. Your accountant asking more questions doesn't mean they think you've done anything wrong. It doesn't mean your SMSF has been rejected, and it doesn't mean you've been reported to anybody. Certain professional services are now subject to banking-style compliance. When a provider actively helps create a trust, establish a company trustee, transfer a legal arrangement, or manage money as part of a transaction, they may be providing what's called a designated service. An SMSF is a trust. Setting one up can involve creating the trust, appointing trustees, and sometimes establishing a company trustee. Those are the kinds of steps the new regime looks at more closely. The professional firm may have to verify who you are, understand who controls the structure, ask about the purpose of the SMSF, and get comfortable with the source of money entering it. For most people, that's straightforward. Identification, current fund details, a rollover, employer contributions, or money that can be clearly explained. But firms now have to document those checks. The rules don't apply to every accountant and every piece of work. Preparing a tax return or providing general information isn't necessarily court. The regime applies when a professional actively provides a designated service, such as creating or restructuring a trust or company. The next question is, what does it mean if a firm calls someone high risk? A high-risk rating isn't a character judgment. It's a compliance category based on the overall picture. That can include a complex ownership structure, overseas connections, whether someone is a politically exposed person, whether the source of funds is clear, or whether the transaction has an obvious purpose. Certain industries can bring a higher level of scrutiny too, but working in a higher risk industry doesn't make a person suspicious. It can simply mean the firm needs more information to meet its obligations. A simple rollover from an Australian super fund is very different from a structure involving several companies, overseas links, third-party money, and no clear explanation of who controls it. The second scenario is likely to mean more questions, even if it's legitimate.
Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes, and let's build your future on your terms. Now, back to the episode.
Now, here's the part that can feel frustrating. Sometimes a firm will ask for more information, and its explanation can seem vague. It can tell you that it needs documents or that it has to complete its checks. That's a normal part of the process. But if a firm forms a suspicion that triggers a report to AUSTRAC, the law can prevent it from saying a suspicious matter report has been made or revealing that suspicion. That's known as tipping off, and it can be a criminal offence. That doesn't mean every delay is connected to a report. Most delays will be much less dramatic. They're often caused by incomplete identification, documents that don't match, unclear ownership details, or a firm working through a new compliance process. So, how do you make the process less painful? A smoother setup usually starts with clear information. Firms will commonly ask for identification, fund details if there's a rollover, company trustee details, and a simple explanation of the source of funds. They'll usually need details of other members or people involved too. If you're unsure why a document has been requested, it's reasonable to ask the firm what it needs to complete the onboarding process. It may not be able to discuss an internal risk assessment, but it can usually explain what documents are required and how to provide them securely. This is the reality of setting up an SMSF in 2026. There is more red tape than there was before, but it exists because trusts, companies, and property transactions can be misused by people trying to hide money or ownership. For legitimate SMSF trustees, it's mostly about being prepared for a more thorough onboarding process. It isn't a reason to panic, it's simply the new compliance environment. If you're considering an SMSF and want a clear explanation of the setup process and what information is usually required, you can book a free call with our team. The link is in the description. Thanks for watching, and I'll see you in the next one.
Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at Blue Chip SMSF or book a call with our team to see if we can help you.